बजट इतना बड़ा, मैं क्या हैं
ये आप
अरुण भाई and Arun Bhai, Kapoor Saab, and everyone known to me, and I believe many of my good friends have been listening to me and have been showering their unconditional love to me, Devender ji. And I hope the words which Anmol ji has showered on me, the praise, I hope I deserve them. But it is like this, that whenever such discussion happens on the part, or whenever such discussion happens, sorry sir, whenever such discussion happens, Devender ji, it is giving me an extra sense of what you say, I feel more careful, and what you say, cautious. I become more cautious that I have to be discharging my duties faithfully, sir. Just before this seminar, I have been discussing in another seminar organized by Rajesh Agrawal ji, and as I have been going through this budget in last 6 or 7 hours, Devinder ji, I find that this budget is one budget which after many years we have find that very less has been, with due respect to Honorable FM, has been very less has been discussed in the budget speech, and the changes are far more deeper, intensive, and expensive and diversified. I believe entire income tax act has been touched somewhere, and the labyrinth and the length and breadth of the amendments, if one has to scale if one has to scale down, Arunji, the amendments, they start from section 2 and they go up to the last sections of the income tax law. And there are, if we go into the terms of amendments, I believe at least 80 amendments, as I was just counting, 81 or 80 amendments have been done. So in this time, only Devender ji, we can discuss the outlines of that, because this is today first day when the budget has come, and we are discussing on the very same day. So we have our own limitations of time also, and of our reading also. That in the given time, limited time, which I have been able to go through, I will humbly tell that point and outlines of the that. So maybe my friend can, as I said earlier seminar also, I'm again saying the same thing, Arun Bhai, a caveat, that my friends will dearly pardon me and apologize me if I am not being able to cover any particular part of the amendment, because there are so many amendments, there are so many provisions, that it is not possible in me to discuss every change in 45 minutes, sir, or 40 minutes. So I would be discussing.
दोबारा बुलाएंगे सर आपको।
नहीं, इस मेरे को नहीं सर, मैं तो अरुण भाई पहले ही बोल चुका हूँ कि ये चेंजेस तो ऐसा है जो एक बार से भी काम नहीं बनेगा, ये तो बार बार 3-4 बार पढ़ना पड़ेगा। और चैरिटेबल ट्रस्ट का मैंने बोला, जैसे एक ही चीज, जैसे मैं आपके सामने दोबारा लिख रहा था, चैरिटेबल ट्रस्ट का लिखते लिखते मेरा पूरा पन्ना खत्म हो गया, बताइए। और वो 4 घंटे का चेंज है चैरिटेबल ट्रस्ट का, मतलब मैं बोलना भी चालू करूंगा और मैं खत्म भी करूंगा, तो टाइम तो लगेगा ना। मान लीजिए मुझे अपना अपना वो जैसे किसी आदमी को इग्नाइट होना पड़ता है, और इग्नाइट होने के बाद उसको, इग्नाइट होने के बाद ध्यानी साहब उसको आगे पहुंचना पड़ता है, तो वैसा वो कैसे होगा? नहीं, और चलिए समय की सीमा को ध्यान में रखते हुए मैं अपनी गाड़ी चालू करता हूँ इनिंग्स। तो पहला प्रावधान ये है सर, जिसपे मैं रोशनी डालना चाहता हूँ चेंज के ऊपर, जो मैडम ने, ऑनरेबल एफएम ने बजट स्पीच में भी बोला था, दैट इज इन रिलेशन टू वर्चुअल डिजिटल एसेट। ये क्रिप्टो करेंसी से संबंधित है, पर उन्होंने क्रिप्टो करेंसी वर्ड यूज नहीं किया अरुण जी। उन्होंने वर्ड जो इस्तेमाल किया है और जो चेंज किया पहला इंपॉर्टेंट, वो आप क्लॉज नोट कर सकते हैं फाइनेंस बिल का और इनकम टैक्स का सेक्शन 2 सब क्लॉज 47A, सेक्शन 2 क्लॉज 47 कैपिटल ए, और उसमें उन्होंने वर्चुअल डिजिटल एसेट का ध्यानी सा परिभाषा दिया है। और वर्चुअल डिजिटल एसेट को जो उन्होंने परिभाषा दिया है, उसमें 3 क्लॉजेज हैं, ABC, सेक्शन 2 क्लॉज 47A में ABC 3 क्लॉजेज है क्रमशः। पहले वाले क्लॉज में उन्होंने बताया है बहुत वाइड डेफिनेशन है। मुझे लगता है कि जो आज की तारीख में जो भी हम में से, आप लोगों में से क्रिप्टो करेंसी के साथ मतलब क्या कहता है, उसके साथ ताल्लुकात रखता है या उनको उन्होंने डील किया है, तो वो चेक करेंगे तो 247A में जो उन्होंने परिभाषा दी है वर्चुअल डिजिटल एसेट की, तो उन्होंने सब टाइप का जो क्रिप्टो करेंसीज है, मुझे लगता है बहुत वाइड डेफिनेशन है अरुण जी, इट्स अ वेरी वाइड डेफिनेशन। उन्होंने उसको बहुत ज्यादा अच्छा इंग्लिश में बोलने क्या सर, चलिए कोई बात नहीं, आई वुड स्पीक इन इंग्लिश। सो सेक्शन 2, माय साउथ इंडियन फ्रेंड्स वुड बी देयर, आई सी। So section 2 clause 47 capital A defines the term virtual digital asset, and it has 3 sub clauses, sir. Clause A, clause B, subclause A, subclause B, subclause C. Subclause A is a very wide definition of virtual digital asset, and it almost includes, Arun bhai, all types of cryptocurrencies. As we read it, it's a very expensive definition. Now, first important significant amendment is this, that they have given us a authoritative definition of the term virtual digital asset. and that is section 2 clause 47A. Now corresponding change, Devender ji, have been made in section 115 BBH, where the rate of tax is prescribed on these transactions. Income arising from special virtual digital asset, if any income arises to any assessee from dealing in virtual digital asset, the provision is around by 115 BBH. It's a special rate of tax. You know 115 wala jo sara provision hai, all these provisions are having special rate of taxes. They are dealing some special income. So 115 BBH is corresponding to the income corresponding to the situation where any income arises to any taxpayer from the dealing in virtual digital asset. And the tax rate, Arun bhai, they have kept is 30%. On the income arising from the virtual digital asset, how income will be computed? They say, as Madam has, Honorable FM has indicated also, they have given the modulation that only thing which will be allowed while computing is the cost of the asset. Nothing more will be allowed while computing the income arising from virtual digital asset. I hope you are getting. So that income element will be taxable under section 115 BBH at the rate of 30%. And in computation of that income, what will be given to you? Cost of asset only. Nothing more, nothing less. No allowance, no further thing, no further expenditure, no allowance. Are you getting my point, sir? And there is a corresponding provision which has been inserted in TDS chapter, sir, 194R. 194R. Now, what does 194R say, Dhyani ji? 194R says that the person from whom the benefit income is or some kind of consideration is passed on in relation to virtual digital asset. अब सर सिंगल साहब रुक जाइए, कोई बात नहीं, छोड़ दीजिए सर, प्लीज सबका सम्मान करिए, छोड़ दीजिए, इस डिबेट में मत पड़िए हिंदी इंग्लिश में प्लीज. वी आर ऑल इंडियंस एंड वी आर ऑल, कोई बात नहीं, हमारे जो साउथ इंडियन फ्रेंड है, लेट अस, अभी आप मुझे हिंदी में तो सुनते आई हैं सर, नो प्रॉब्लम. So Dhyani sahab, I was saying कि 194 capital R says that if some consideration, it can be a, what you say na, monetary consideration, or it can, it is like this that when virtual digital assets are transferred, some kind of hypothetical you say, or some kind of notional consideration I can say, is transferred by one person to the other person. That is why income arises, na? That is how income will arise. So they are saying Arun bhai, 194R, they say that the person from whom consideration passes in relation to virtual digital asset and the person to whom it is transferred, that consideration, from where it is going, the TDS will be deducted at the rate of 1% on the consideration, subject to monetary threshold given there. Are you getting my point? Should I repeat? 194 capital R says where the consideration transfers in the case of virtual digital asset from one party to other party, there shall be TDS done by the person from where the consideration is going on. Now they have encapsulated this contingency where there is no monetary consideration. It is in kind, you say, na? It is in kind. In one virtual digital asset is transferred in lieu of another virtual digital asset. Then how the TDS will be done? They have said that the person who is giving that consideration will ensure to whom it is giving in kind, he is paying the due taxes in his hands. Are you getting my point? So a duty is casted under 194 capital R, where benefit goes, consideration goes. 194R, sir. It is 194R or it is 194S? Sorry. It is 194S. Let me again check it, sir. Sorry. I'm sorry. It is 194S, sir. I'm my friend who has said me. Yes, sir. 194S, sir. It is 194 capital S. Yes, right. Yes, sir. 194 capital S. So they say that if a consideration transfers from one person to other person in relation to virtual digital asset, the TDS shall be done at the rate of 1%. And if this is in kind, then the person who is transferring that consideration shall have to ensure, Devender ji, the due taxes are paid by the transferee in the recipient hands. So that is the duty casted in the hand of the person who is transferring that consideration. And section is 194 capital S, sir. It's a new section and it is corresponding to the changes made in section 2 clause 47 capital A. The definition of virtual digital asset is given. I'm repeating. 115 BBH gives us special rate of tax on this virtual digital asset income, that is 30% rate. And 194 capital S gives us the provision where TDS is recommended at the rate of 1%. And monetary threshold is also there, sir, which you can check. And this provision also has that contingency. I'm saying it's a very special provision or area of the law where they are putting this extra onus on the transferor, that while transferring any consideration, he has to ensure due payments of taxes are made at the end of the transferring. Is it okay, Arunji?
Yes, sir.
So this completes this part of the area of the amendment where virtual digital assets are touched. Second area of the amendments are, sir, where detailed changes are made in charitable trust, sir, section. And if I want to divide it for facility of discussion, Arunji, then it can be divided in 5 or 6 parts. You can note down quickly. As we have divided virtual digital asset, 247A, 115 BBH, and 194 capital S. We can also divide this charitable trust wala, sir. Section 11, see, I am telling you the main areas of the amendments, Kapoor Sahab. The main areas of the amendments are section 1023 capital C. Major the institutions which are covered under 1023C, subclause 4, subclause 5, subclause 6, and subclause 6A. I hope you are noting 4, 5, 6, and 6A. 4 types of organization in 1023C. 1023C, these are parallelly covered. 1023C, subclause 4, subclause 5, subclause 6, subclause 6A, and section 11. So whatever I will discuss in section 11 with reference to, it will mutatis mutandis apply to 1023 capital C, subclause 4, subclause 5, subclause 6, and subclause 6A wala institutions. I hope it is clear, Anunbhai. So this is the prefatory remark. Now, what are the types of amendments or areas of amendments? First area of amendment which they have done, Arunji, is that if any trust or institution, let us say I'm taking section 11 wala part. In section 11, let us say there is a trust, charitable trust, and they have in the property of trust a temple, gurdwara, church, or mosque, or any other religious institution. And that trust, Manojji, receives any money for the repair and renovation of the temple, etc. Then they have inserted two explanation in section 11. That is explanation number 3 capital A and explanation number 3 capital B. You can note down. These are the 2 explanations which are added in section 11 subsection 1, which says that if a trust holding temple in the trust, if a trust holding temple in its property obtains any money from any person for repair and renovation of the trust, it can treat it as corpus. Arun Bhai, the option is given to the recipient trust that it can be treated as corpus, provided 4 conditions are satisfied. And it will remain non-taxable. What are those 4 conditions? They have added the 4 conditions that it can be treated as corpus only when that 4 condition will be satisfied. Are you getting my point? That utilization is done for that purpose for which that amount is received. It is not invested outside section 11 subsection 5. And there are 4 conditions if you will read section 11. First condition is this corpus is applied for the purpose which contribution was made. Second, it is not given to any other person. This amount is further not donated to any other person. Third, it is this amount is kept separate identity of this amount is maintained. And fourth, the investment of this amount received as corpus is invested under 11.5 only. No investment is made for other non-permissible mode. So what I said is that a temple trust, a trust having temple in its possession, can receive the money for repair and renovation of the temple as corpus in its hands, provided these 4 criteria conditions given in this explanation 3 capital A are satisfied. First, the utilization amount point. Second, you cannot further give it as contribution to any other person. Third, sir, it remains separately identified. And fourth, it remains invested in the meantime when it is utilized, it remains invested as per 11 subsection 5. And in any event, if any of these 4 conditions are violated, then in the year in which the trust will violate that condition, it will become deemed income of that year. That is explanation number 3B. They have told this contingency also, Arunji, if this trust, while treating this amount as corpus, breaches any of the 4 conditions which I have narrated, then this amount will become deemed income in the hand of the trust in the year in which the violation
takes place.
Am I clear or not? Should I repeat?
Yes,
sir,
clear.
am I clear? Am I clear, sir? Okay. So first part of change is this, that explanation 3 capital A and explanation 3 capital B inserted in section 11. Now comes, and these are parallelly, I have told you, Arunji, added in 1023C, subclause 4, subclause 5, subclause 6, 6A. I am not repeating it for the sake of benefit, to avoid time wastage, sir. Next part of the change is very important part, Arun Bhai, as I have said in my other seminar. This is I believe is something to be noted with curiosity. This is the new explanation again added in section 11.1. It says that, sir, ki any trust, whatever method of accounting it is following, जो cash, the trust which is following cash system, Kapoor साहब, वो तो application cash system पे ही लेगा ना, वो तो खर्चा cash system पे लेगा. I say in English, the trust who is following cash system of accounting will take the benefit of any application of income, etc., as per cash system only. But the trusts who are following mercantile system also, we know we have organizations like Section 8 companies where mercantile system is followed probably. So now they say this in this amendment, in this explanation, new explanation, that any sum payable by any trust or institution shall be considered as application only in the year in which such sum is actually paid, irrespective of the method of accounting followed by the concerned trust. Am I with you, sir? So now application of income will be available only on payment basis. Are you noting my point? And this is why the new explanation inserted below subsection 7 to section 11. This is a very serious change, and it brings some kind of hybridness in the accounting of the taxation accounting of the charitable trust, to my humble knowledge. It makes something hybrid. You know, na hybrid. It can happen that receipt is coming on mercantile basis, application of income is given on cash basis. I hope you get my point of view, but they are very clear. Now the application will be given only on payment basis. Third part of the change is Section 12 capital A, which somewhere Arunji decides the eligibility of the status of the charitable trust. Section 12 capital A. Now they are giving lot of emphasis in this amendment, which I am going to discuss in 12A, where 12A subsection 1 clause B. You can note the full provision name, 12A subsection 1 Roman B. They say the trust to be eligible as charitable trust need to maintain the books of accounts as prescribed by the rule making body and gets its account audited. That requirement was already there, I believe, audit requirement. As we have seen, this is a new area where they have brought in 12A subsection 1 Roman B, that now CBDT will prescribe under its rule making power that what are the special and prescribed and particular books of accounts, Arunji, the charitable trust has to maintain to be eligible as to enjoy the status of charitable trust. That is 12A subsection 1 Roman B. Books of accounts को बहुत ज्यादा उन्होंने emphasis दिया है सर. और आपको मैं बता दूं, ये अगर आपने books वाला requirement breach कर दिया तो उन्होंने आगे एक और amendment किया है, which we know, where they say कि commissioner can cancel your registration if proper books are not maintained. Are you getting my point? So you have to be very careful while reading this part of the amendment under 12A subsection 1 Roman B. I am repeating. The emphasis is given on proper maintenance of the books of accounts as prescribed by the CBDT in their rule making power. What books which they will prescribe, Arun bhai, we don't know. It will be usme likha hai as prescribed. Prescribed means hota hai ki that CBDT will come with the rules. Probably some kind of rule will be there, as we know in section 44 AA rule 6F is there, Kapoor sahab. So we can have some kind of rule here also now. Are you getting my point? So it is adding a further compliance to the charitable trust. Additional compliance on the charitable trust. I have discussed 3 amendments, Arun bhai. Explanation 3A, 3B. Second, I have discussed this new application of income on payment basis. Third, I have discussed 12A, 1B. Fourth part of the amendments. Fourth part of the charitable trust amendment, Arunji, is dealing with section 12AB subsection 4 and 12AB subsection 5. Now, we all know, Arunji, last year there were a lot of changes made in the registration of charitable trust in section 12AB, etc. Now, this changes which are made in this finance bill are some kind of extension of the last year changes. I hope you are getting my point. So now 12AB subsection 4 and 12AB subsection 5, they have said, Kapoor Sahab, to say in simple language, that if commissioner, concerned commissioner, the concerned commissioner and competent authority finds that any specified violation, the term which is used, Arun, by the new term which is given is specified violation. And there is a long list of specified violation in 12AB subsection 4 and 12AB subsection 5. Now, if any of the specified violation is detected and noticed by the competent authority, that is the concerned commissioner, sahab, then he can initiate the deregistration and cancellation proceedings of the concerned charitable trust. There are 3 areas where the cancellation proceedings can start now. One, where concerned commissioner comes to notice that some specified violation takes place, or risk management strategy made by the CBDT brings the trust in suspicious character. And third, the assessing officer refers some inquiry to the commissioner. In all these 3 conditions, Kapoor Sahab, the authority can initiate the cancellation proceedings. Now, after initiation, he will give you natural justice. He will give you proper opportunity. Now, if the basis of the initiation will be specified violation, I hope you are noting. And when you will appear before the commissioner, you will definitely try to prove from your side, trust side, that there is no specified violation and cancellation proceedings should be dropped. Now, Arunji commissioner, after initiating the cancellation proceeding in 12AB4 and 12AB5, either he can cancel the trust from the prospective effect, or he can drop the proceeding also. Both powers are given in the 12AB4 and 12AB5. Now, the main area of concern is, Mr. Goel, what are the new specified violations which were not there in the previous till the previous time and which are now introduced, Kapil sir? So I can tell you two important variations are there. Variant, you know, we have variants. So this is a although there is a long list of specified violation, but I believe more or less they are same except these two things which I could detect. One is if charitable trust earns any income, you may note down, if charitable trust, which is a registered charitable trust under 12AB, it obtains any income outside its objects, then Arun, cancellation proceedings can be started and it can be counted as specified violation. Or even if the books which are prescribed to be maintained are not maintained by the trust, concerned trust, then also competent authority can initiate the cancellation proceedings, treating it as a specified violation. So you have to be very careful. Now the horizon and the, what you say, the bandwidth of power of commissioner to cancel the charitable trust registration is wider as it was earlier, Kapur Sahab. That is number one. And the basis which is there is specified violation, and the list of specified violation which is given in this law is a long list. And in that, what are the two new things which I could find? I have told you: books maintenance point and income earning point. I hope you are getting my point of view. Now, corresponding changes, sir, to this power of 12AB subsection 4 and 12AB subsection 5. There are two important changes, sir, Kapur Sahab, which have been made in section 115 BBI and section 271 AAE. You please note these two sections. I'm telling you, this is very important, sir. 115 BBI and 271 AAE. Now, what is 115 BBI? 115 BBI means, sir, that, sorry, before coming to 115 BBI, just I will tell, there is another subsection added in section 13 also. That is section 13, subsection 10. Now, what it says, if a charitable trust earns any income from commercial activities, business activities, trade activities, or charitable trust violates the condition of section 12A1, then the income of the charitable trust will be computed in the manner given in now section 13, subsection 10. To say in simple words, let us take a case of a charitable trust who happens to earn some business income, or who happens to violate some condition of eligible condition of 12A subsection 1 clause B or BA. Then they say usko application ka benefit nahi milega, usko kharcha milega, aur wo kharcha kaun sa hoga? That is expenditure. Now that trust who violates 12A condition or who violates 13 subsection 8 condition, then his income will be determined after giving expenditure, and that expenditure which is narrated in section 13 subsection 10. What is that expenditure? You can note down. That expenditure, number one, should be revenue expenditure A. It should not be capital. मतलब ये नया concept है, section 13 subsection 10 is an absolute new concept, that in some cases the computation of income of charitable trust will happen in this manner. It will not be application of income criteria, it will be expenditure criteria. Expenditure criteria means revenue expenditure, expenditure in India, and expenditure which is otherwise fulfilling the eligible condition in section 13 subsection 10. एक तो वो revenue expenditure होना चाहिए. One, it is revenue expenditure. Second, it is incurred Devendra ji in India. And third, it is fulfilling the eligible criteria given in section 13 subsection 10. So section 13 subsection 10, sir, is a different kind of computation of income mechanism given by this finance bill in some circumstances. It is not that it is applicable, Kapur Sahab, in all cases. Only in specified cases, this income criteria and computing criteria will take place. Now I come to those two provisions which are new provisions, 115 BBI and 271 AAE. 115 BBI, sir, is a provision, again a special rate provision, as it was in virtual digital asset. It is also a same kind of provision, 115 BBI, where special rate of income is recommended for those trusts and institutions, Kapur Sahab, who are earning some specified income. I just used the word specified violation. I'm now using the word specified income. Specified income earned by the particular trusts and institutions, which I have told you, section 1023C wala institutions, clause 4, 5, 6 and 6A, and section 11 wala institution. What is specified income? That is interesting. Specified income is that income, sir, which either you have now, which is becoming deemed income in the hand of the charitable trust, or which you have got due to violation of section 13(1)(c) and 13(1)(d). You know, Kapoor Sahab, the charitable trust in their tax treatment, they have various areas where section 11 makes charitable trust taxable on deemed income, as we have just discussed also in some case. So this 115 BBI says that if a charitable trust has some specified income, and specified income is defined as 5 types of income. There are A, B, C, D, E, I, as I have seen, sir. Somebody who's having the finance bill along with me, he can vouch for me. A, B, C, D, E. 5 types of income are counted as specified income in the hand of the trust concerned under 115 BBI. Now, first income is the income where the charitable trust, Kapoor Sahab, applied for accumulation, but accumulation fails. It's a illegal accumulation or unlawful accumulation. Then it will become specified income. Second is where the charitable trust, although accumulated some income, but it breaches the norm and object of the accumulation, and it utilizes it in the impermissible manner, then it becomes deemed income, and that deemed income becomes specified income. So you are noting this specified income are those incomes which have some taint of violation. For example, first kind of income was income accumulated or set apart in excess of 15% of the income, where such accumulation is not allowed under any specific provision of the Act. So it means you have done some accumulation, but it is wrong. It is not a correct accumulation. Second is deemed income referred to in section 11, subsection 3. What is that deemed income? Which arises due to misutilization of accumulated funds. Third one is, you can note down, third one and fourth one is very interesting. 13(1)(c) wala and 13(1)(d). If a charitable trust happens to invest its funds in some impermissible mode, or if a charitable trust is giving some benefit to related parties, then that part of the portion 13(1)(c) and 13(1)(d) will become specified income. And fifth part is any income which is not excluded from total income under 11(1)(c). So these 5 incomes are specified incomes taxable at the rate of 30%, flat rate of 30%, sir. So you can note down with curiosity that you have a special regime of cancellation, sir. You have a proper detailed regime jahan cancellation ho sakta hai. You have 115 BBI. And Kapoor Sahab, the next provision which I am discussing is 271 AAE. What is 271 AAE? Be cautioned. The moment assessing authority detects any kind of funds or the property of the charitable trust is utilized for the benefit of the related parties, then not only your registration can be cancelled, not only you can be taxed under 115 BBI, but also assessing authority can leave a penalty on you in the new provision 271 AAE. Are you noting my point, sir? 271 AAE. Now 271 AAE arises in which contingency, sir? Arises in the contingency has violated the provisions of the 25th proviso or 13(1)(c), where you are giving benefit to a related party. Kapoor Sahab, where any benefit is given by the charitable trust to the related party, then assessing officer कितना penalty लगा सकता है? जितना आपने benefit दिया, sorry, I'm speaking in Hindi, the amount of the benefit given by the trust to the related party, 100% penalty can be levied in case of first violation, but it remains habitual offender. Then the penalty go from 100% to 200% in case of subsequent violations. So be cautioned. The moment charitable trust, now they are very clear about it, charitable trust should not give any benefit to the related parties, and if any benefit is given, Arun bhai, to related parties, then registration can be cancelled in 12 AB subsection 4 and 5. Income can be taxable under 115 BBI specified income, and third, the penalty can be levied under 271 AAE. I hope all these 3 changes have been noted very carefully by you. These were the 5 or 6 kinds of special changes, Arunji, which I said ki are a very detailed, very detailed changes in the charitable trust life, sir. So I first said explanation 3 and 3B. I repeat. Then I said explanation of application of income on actual payment basis. Then I said books maintenance wala part 12A 1B. Then I said cancellation power of Commissioner 12AB subsection 4 and subsection 5. Then I discussed 115 BBI, 271 AE and section 13 subsection 10. So these are the Arun Bhai changes, major changes in charitable trust. Now comes the other, after this, when we come out of charitable trust. See, I don't know how much justice I have done, but this is the minimum possible. I don't know how more shorten we can do this discussion, sir. Sorry. है अरुण जी?
ठीक है नजर अब जस्टिफाई कर दिया आपने जी.
सर अगला पार्ट सर जो है अगला the next provision which I want to highlight is section 14A. This is the change which is made in context of CBDT circular which came in on 2014. Circular number 5/2014 can be noted by you. The issue was this, Arunji, that section 14A various high courts in the country said that section 14A disallowance cannot be made if there is no tax-free income earned by the assessee. Now they linked the invocability of section 14A to the earning of tax-free income. Am I with you? Our CBDT, you know, when it gives circular, sometimes they become revenue friendly. Sorry, sometimes they become assessee friendly also, but they issue a circular number 5/2014. This circular said, you know, even section 14A can be applied even without tax-free income. This circular was issued in 2014, Gupta Sahab, and we are in 2022. I hope you are also noting the time which has been passed after 2014. This is a very critical point. Now, after that 2014 circular, various high courts, various constitutional courts, honorable high courts and judges in the country, Arun Bhai, across India, all the high courts almost unanimously hold this circular to be wrong, ultra-virus, unconstitutional, as they believed, high courts believed that section 14A as per its plain language should not have been applied unless some tax-free income is earned. Now they have retrospectively they have made the law change. First change in section 14A is this, Arunji, they have added non-obstante clause in beginning of section 14A. Now, when I say non-obstante clause, you know that they have inserted these words, notwithstanding anything to the contrary contained in this act. Then after adding this non-obstante clause, in the opening part of section 14A subsection 1, they have inserted a new explanation to reincarnate the spirit of the CBDT circular number 5/2014. And this explanation virtually says that high court decisions were wrong, it were against the legislative intent, and CBDT circular was right. So what explanation says, Arun Bhai? Explanation says section 14A could have always been applied even if no tax-free income is generated in a particular year. So this is that kind of retrospective amendment which we all wish should not have been done, at least in this distasteful manner, to my humble opinion, where so many high court decisions are now nullified. And just to vindicate the sense of circular, I'm sorry, CBDT is not above high court, sir. You know, our Supreme Court has already held in Constitution bench, circulars are not above court rulings. Are you getting my point? I can cite you 5-judge bench order in Ratan Melting Works. You can note down. There is a Constitution bench decision of Supreme Court of India in Ratan Melting Works. Academically, I'm saying, it says that courts circulars of the CBDT and Central Board of Excise Customs cannot override court orders. But now this amendment which I'm discussing with you is a next part of the circular only. Just to make circular valid, the amendment has been made, and that too, I believe, it will have a very serious retrospective implications. Because all those cases where the assessee have won, or might be, see, rather those cases which are pending, Arun Bhai, will definitely come under this radar. I hope you have got it, this change of section 14 capital A. And the basis is circular number 5/2014, sir. The next change is, sir, section 17, perquisite in the hands of the salary people. This change is made in section 17 subsection 2, and corresponding change is also made in section 56 subsection 210. Now, salary head section is section 17, where the change is made, Kapoor Sahab, and the income from other sources 56 subsection 2 clause 10. I will just outline what is this amendment about. We all know there was a press release dated. You can note the date of this press release, then you will connect with the amendment. There was a press release last year by the Government of India, Ministry of Finance, 25th June 2021. Now, in this press release dated 25th June 2021, it was stated by the government that any person who is receiving, any employee who is receiving from his employer any expenditure reimbursement of COVID, or his family receiving any money on his death, on the death of employee Arun Bhai, any money received from the employer shall not be taxable. That was the content of circular. Even they also said ki if some other person is giving some ex gratia amount to the person who died due to COVID, till 10 lakh rupees, till the cap of 10 lakh rupees, it will be non-taxable. Where the amount is received from other person, non-employer. If the amount is received from employer, it is without limit exemption. Where the death is due to COVID of the employee. Are you getting my point? So now to just bring that what you say statement of the press release into the law, they have made these two changes. One change is made in section 17 subsection 2, and second change is made in section 56 subsection 2 Roman 10. And that is just a extension of the press statement dated 25th June 2021. I hope I have made this point clear to you. If the amount is received from employer on the death without limit exemption, sir. If the amount is received from any other person on the death due to COVID, the cap is 10 lakh rupees. And and the amendments are made in two places, section 17 subsection 2 and 56 to 10, sir. Now, next part of the amendment is very important and critical areas. Are two sections which we will discuss, Arun Bhai. Section 68 and section 79A. Section 68 is amendment because it applies to various transactions, sir. You know, section 68 has been one very favorite provision to me. Rather, I can say in humble words, Arun Bhai, my one major area of practice in the income tax high courts and tribunals has been section 68, unexplained cash credit. We know 2012, there was an amendment in section 68 where the legislature said that when you receive share capital, closely held company receives share capital, then Kapoor Saab, source of source is to be proved when of shareholder by the company who is receiving the share capital. Now they have said if any loan or borrowing is received by any person, are you getting my point? Whether it is related person or whether it is non-related, are you noting with me or not? It is like this: ki Kapil Goel is nearer to Arun Bhai. Arun Bhai gives friendly loan to Kapil Goel, and friendly loans are in India are going from time immemorial, Arun ji, if I say. So in loan or borrowing, additional onus is put by section 68 that source of source have to be proved by the borrower of the lender. I am sorry, sir, I have already told in the other seminar, this amendment I cannot understand, at least from layman point of view, that how borrower will go behind the lender to ask the lender ki saab, you are giving me the loan, plus please tell me from the source where you are giving your balance sheet and bank statement, etc. everything. I don't know.
लेटर मूवमेंट में पूछ रहा हूं केस स्क्रूटनी में किसका आएगा, दोनों के आएंगे क्या?
सर अभी तो वो उसको टारगेट कर रहा है जो बोरोवर है. Patni sir, please do not see. Samita ji, kindly see. I cannot just in the between take the queries. Kindly see. I have my limitations because if I start discussing the in between lines, na this seminar I can't complete and do justice. Sorry. Kindly bear with me. See, Patni ma'am, please. Sir. So what I was saying, section 68, sir, that this amendment says that loan or borrowing is the word. Gupta sahab, loan or borrowing is obtained, then source of source will have to be proved. So if you don't prove, you know, if the moment you don't prove, the addition will be made under which section? 68. And the moment 68 is invoked, Arun Bhai, we know the section 68 is to be followed by 115 BBE, the rate of 60% tax rate. So be careful while taking any loans or borrowing. It's a prospective provision. It's not a retrospective amendment, thankfully.
उसमें सॉरी माफी चाहता हूँ, उसमें तो ये था ना कि पैसा अपना ही लगा सकता है, तो सोर्स ऑफ बोरोइंग का तो अपना ही पैसा दे पाएगा ना लोन पे, तो इसका मतलब यही
नहीं 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 ना 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 उसका कहने वाला ये नहीं है सर, वो ये नहीं बोल सकते सर. सी that is like this कि अब Kapil Goel is taking loan from Arun Gupta or Manoj Kapoor, then they expect Kapil Goel to prove to the AO in his assessment, Kapil Goel's assessment, borrower's assessment, that what are the sources of loan given by Arun Gupta and Manoj Kapoor.
Okay, sir, okay.
They don't say कि अगर मनोज भाई ने देवेंद्र से लोन ले लिया और उससे लेकर दे दिया तो मनोज भाई को भी ग्रहण लग सकता है और कपिल गोयल को भी लग सकता है, दोनों पार्टियां रडार में रहेंगी. आप समझ गए या नहीं समझ गए? दोबारा समझाऊं?
समझ गए. ओके सर, ओके.
ये बहुत खतरनाक प्रावधान है सर. ये अमेंडमेंट मैं पहले बोल चुका हूं. मेरे अंडरस्टैंडिंग में इसका कॉन्स्टिट्यूशनल वैलिडिटी डिबेट होना, मैं कोई अथॉरिटी नहीं हूं, but I humbly feel, Arun bhai, this change of section 68 needs to be seriously debated and further mined out. Next change, important change, which I have to flag is section 79 capital A, sir. Section 79 capital A, this change, Arun bhai, touches those people on whom search happens, that is income tax raid happens, as said in common parlance, or survey happens. And in the search and survey, if some undisclosed income, quote unquote, undisclosed income as defined in section 79A is detected during the search and survey, then the provision says that the undisclosed income so detected in the search and survey will not be offset by any loss of with any other loss. Are you getting my point? Whether it is carry forward or whether it is the same year. Are you getting my point or not? Section 79A then says if an assessee is raided or surveyed, and in that survey, Manojji, he declares some amount of additional income, which we know very common, on account of unaccounted stock, cash, etc. These are the surrender items, stock, cash, etc. Then, although it should be taxed as business income, in my humble opinion, but the amendment says that the moment you declare it and offer it to tax, you cannot set off it against any other loss. That is section 79 capital A. The amendment is also made, Arunji, in the company of those provisions where restriction of set off of loss is there. Are you noting? Section 79A comes after 79 and all other provisions dealing in set off head. I hope you are noting my point. The placement of the section, I have learned, Arun bhai, I have no time to debate it further, but placement of a provision in the law also tells us how to interpret it. So section 79A का जो heading भी है, for benefit of my viewers, I can quickly tell you what is the head note of section 79A. Head note is, because it may help you to understand the nature of the provision. Head note is, Arun bhai, head note, you know na, the heading of the section. Head note says no set off of losses consequent to search, requisition and survey. I have Supreme Court decisions, but I have no time to tell you that this head note is a very important basis to interpret the scope of a provision of law, Kapil sir. So I hope with this I can travel to my next amendment, sir, with your kind permission. The next amendment which I want to touch here is, sorry, Arun bhai, my throat has become bad due to seminars and all those things, you know. And because from last 3-4 hours I'm continuously speaking. Sorry, my throat is taking the test of my strength. The next change, Arun bhai, which I want to highlight here is in section 115 BBH and 115 BBI. I hope 115 BBH, I have told you this is the change which was made for virtual digital asset special income, and 115 BBI is the change relating to specified income in the hand of the charitable trust, Kapur Saab. Now after that, the important change, Arun bhai, is made in that section which Madam Honorable FM has touched in her budget speech. That is the new concept of return called as updated return. There is a very elaborate subsection 8A. You can note down the provision 139 subsection 8A has been inserted in section 139, which deals with the new concept of updated return. Now, what is updated return, Arun bhai? This return can be filed by any person who has already filed his return or who has not filed his return. Are you noting my point? And this return under 139 subsection 8 capital A can be filed within 2 years from the end of the assessment year, as Honorable FM also says in budget speech. Now this can be filed. What is the basis to, or what is the motto to go behind updated return? Memorandum of Finance Bill says, just to impress upon the taxpayers to pay tax on something which they have missed in their return income, which they have missed in their return. They are just convincing the taxpayer to come forward voluntarily and pay tax in this updated return, which they have missed in otherwise, Kapur Saab. So now what is 139.8A? 139.8A is updated return. It can be filed by the person who have already filed the return also, and it can be filed by those people also who have not filed any return. Are you with me? There is a long eligibility criteria that this 139.8A return cannot be filed, Gupta ji, by those people who are searched. जिनके ऊपर सर्च हुआ है वो नहीं फाइल कर सकता भाई साहब. ये जिनका कोई एडवर्स इंफॉर्मेशन या कोई not Jyoti is similar to revised return. It is like this, that they are wanting more people to come out with the income which the assessee has not offered for tax and which assessee otherwise believes कि वो सर्वे सर्च में डिटेक्ट हो जाएगा. अभी हुआ नहीं है सर्वे सर्च, होने वाला है या हो जाएगा. सॉरी, हालांकि ये तो अरुण भाई किसी को भी पता नहीं है सर्वे सर्च कैसे होता है. सॉरी, ये कोई थोड़ा ना तरीका है. तो मेरा इंडिकेशन समझ गए आप. They want more people to come forward to voluntarily declare that income which otherwise has not been offered to tax. That is how they have said in memorandum. Are you noting my point, sir? So this can be filed by any person. No, you can't claim any refund, sir. This return cannot be for loss. This return cannot be to avail any further benefit or to ask for refund. This is clearly prohibited, sir.
गवर्नमेंट ने नियम लेने के लिए बनाया, देने के लिए नहीं.
हाँ, बिल्कुल सही कहा अरुण भाई ने कि इट इज फॉर गिविंग, इट इज नॉट फॉर टेकिंग. और गिविंग में भी आप नोट कर लीजिए, देना क्या है. बहुत ये दान जैसे होता है ना, यू हैव टू पे 4 थिंग्स. देवेंद्र जी, मतलब किसी आदमी को समझना हो सिंपल सेंस में, व्हाट वी हैव टू पे. इफ this updated return, Kapoor Sahab, is filed within 12 months from the assessment year, then you have to pay 25% of the tax, additional tax as additional tax. मतलब आपको 4 चीजें देना है. आप नोट कर लीजिए 4 चीजें. एक तो जो टैक्स बनता है वो देना है, इंटरेस्ट बनता है वो देना है, जो भी आपका उस पर कोई फीस बनता है वो भी देना है, और साथ में एडिशनल टैक्स देना है. तो कितना चीज हो गया सर? 4 चीज हो गया. मैं दोबारा रिपीट करता हूं. 4 things will be paid by you when you will file updated return, sir. Depending upon the facts of the case, the normal tax you have to pay, interest on that you have to pay, fees if any pending have to be paid, and then 4th component is additional tax. Now how you have to compute additional tax, I am telling you. If this updated return is filed within 12 months of the assessment year, then the additional tax will be 25% of the tax and interest. 25% of the tax and interest if it is filed within 12 months of the end of the assessment year. If this updated return is filed after the 12 months and before 24 months, then this additional tax will become 50% of the tax and interest. So they want more, they don't want to give anything. वो तो गुप्ता जी पैसा अभी तो टैक्स भी चाहिए, इंटरेस्ट भी चाहिए और एडिशनल टैक्स भी चाहिए. And the provision where additional tax payment is recommended, Kapoor Sahab, all of you can note down, that is section 140B. 140A is self assessment with normal return. अपडेटेड रिटर्न के साथ जो आपको टैक्स भरना है सर, सेल्फ असेसमेंट टैक्स, वो प्रोविजन यू कैन नोट डाउन, दैट इज सेक्शन 140B. पेनल्टी नहीं है सर, पेनल्टी पुनल्टी कुछ नहीं है. तो चार्ज सर आप क्यों इतना बढ़ा रहे हैं अभी तक? इससे भी देखिए सर, ऑलरेडी वो पेनल्टी का अमाउंट आ तो गया. वो एडिशनल टैक्स क्या है? वो पेनल्टी तो है. व्हाट इज द नेचर ऑफ द एडिशनल टैक्स? सॉरी,
आपने फीस बोला था ना, फीस तो पेनल्टी होती है ना जी. वो
नहीं फीस नहीं सर, वो फीस क्या फीस थी अरुण भाई? मैं क्या बोलना चाह रहा था मैं पूरा बताता हूँ उसको. वो फीस है जैसे इनकम टैक्स एक्ट में बाद में बहुत सारी चीजों की फीस आपको देनी है. जैसे आपने रिटर्न लेट फाइल करी या नहीं फाइल करी, तो वो बोलते हैं कि अगर आपको उस ईयर के लिए कोई फीस भी देनी है, यू नो ना, देयर इज सम फीस फॉर द नॉन फाइलिंग और डिलेड फाइलिंग ऑफ रिटर्न. सो दे वांट यू टू कम विद द अपडेटेड रिटर्न विद प्रॉपर कंप्लायंस. नाउ व्हाट इज द प्रॉपर कंप्लायंस गुप्ता जी? प्रॉपर कंप्लायंस, इसका जो टैक्स बनता है वो देंगे आप, उसका जो ब्याज बनता है, इंटरेस्ट बनता है वो देंगे सर आप, उसका जो अगर कोई फीस आपका बनता है, फीस आप समझ गए, जो फीस कंसेप्ट आप समझ रहे हैं ना, और जो आपका एडिशनल टैक्स बनता है, वो चारों चीजें देंगे. सम सॉर्ट ऑफ जो ये 234F, यस दिस इज दिस काइंड ऑफ फीस, लेट फीस. यस, पेनल्टी का जो कंपोनेंट है वो तो एडिशनल टैक्स हो गया. वो और क्या है? वो आपको दोनों काम कर रहे हैं. दे आर आस्किंग यू टू वॉलंटरली कम फॉरवर्ड एंड डिक्लेयर योर मिस्ड इनकम, and they are also asking you to pay upfront additional tax also. Without payment of additional tax, you cannot file this return. Are you getting my point? Yes, interest also is included. While computing additional tax, you have to include tax and interest, sir. And section I have told you 140B. Arun bhai, is it clear? And the people in whose cases there are information received under Benami law, PMLA law, स्मगलर्स लॉ, और एक चौथा लॉ था, मैंने चौथा फोर्थ लॉ. देयर आर 4 प्रोविजन: पीएमएलए लॉ, बेनामी लॉ, स्मगलर्स लॉ, एंड देयर इज वन मोर लॉ. इफ द इंफॉर्मेशन कम्स, ब्लैक मनी लॉ, यस, 4 लॉस, then this return cannot be filed. Are you getting my point, Arun ji? If in your case department has received any information in the case of assessee under PMLA law, Benami law, black money law, and smugglers law, then you are not eligible to file the return under this 39A subsection 139(8)(a). And there is another corresponding change. One change I have told you, 140(B), how you have to make the compliance of payment of tax, that is discussed in section 140B. But how the amendment time limit of assessment of this return kaise hoga, wo that is they have told Arun bhai in section 153 subsection 1A. No sir, updated return can updated return can be also filed if original return is belated return, revised return, वो सब ठीक है. बट अपडेटेड रिटर्न एक बार फाइल करने के बाद आप दोबारा अपडेटेड रिटर्न फाइल नहीं कर सकते हैं. आर यू नोटिंग माय पॉइंट अरुण जी? अपडेटेड रिटर्न कैन बी फाइल्ड in all the cases where written under 139.1, 139.4, 139.5. See, 139.1 is original return. Let me tell you, 139.4 is belated return, 139.5 is revised return. Even though taxpayer has already filed revised return, Kapoor Saab, then he can file updated return. Even though he has not filed any return, then also he can file this return. Are you getting? But there is a eligible criteria which says that if any information has come in his case from PMLA law, Benami law, black money law, smugglers laws, if in his case search has happened, or he is claiming refund, all these are not eligible. Are you noting my point? And then what is the payment of tax? That is section 140B. 140B. How assessment can be completed? What will be the time limit of the assessment on this special return, on this updated return, Arunji? The section is 153 subsection 1A. You can note down. 153 1A says, from the end of the financial year in which this updated return is filed, 9 months will be given to assess the income. Are you noting? 153 subsection 1 capital A, time limitation of assessment qua this updated return filed under 139.8A. That is 9 months from the end of the financial year in which this return is filed. बहुत मुश्किल हो जाता है अरुण भाई, मैं बार बार बोल रहा हूँ, कई बार इनको कोरिलेट करना. सो 139.8A plus 140B plus this 153 1A, all these three provisions have to be studied together. Can I go further, sir?
सर टाइम थोड़ा सा देख रहे थे कि 9 बज गए हैं, तो आप
5 मिनट हो दे. 10 मिनट
प्लीज सर, प्लीज.
अरुण भाई क्या करें?
हाँ 5 मिनट ले लीजिए, कोई दिक्कत नहीं है.
5 मिनट में हो नहीं पाएगा यार वैसे. क्या सॉरी. चलिए, I will try. See, next important changes are made in faceless assessment, sir. They have introduced this, they have replaced the section 144B. It was already there, Arun bhai. We have all discussed it a lot of times, 144B. Now they have comprehensively changed 144B. Matlab replaced it, and 2 variations you can note down, variants. I say in light sense. 144B, one thing which they have added is, Arun Gupta ji, that the assessment of cases under 143.3 can take place in faceless. ये पहले भी था. 144 best judgment assessment can take place in faceless assessment. Now they have also said even in 148 type cases, income escaping assessment cases, 144B can be applicable. That is faceless assessment. They have now very clearly said in the law that 144B faceless assessment can take place in 147 type cases also. Another change in 144B which is worth noting is that they have deleted one subsection 144B subsection 9, which earlier used to say that any assessment made in violation of faceless assessment scheme will be non-est. This section was 144B subsection 9. Now they have deleted this provision from the time when it was inserted, saying that no, this provision is not required to be there. 144 capital B subsection 9. It has some impact, but yes, you can note down that this deletion they have say no, 144B subsection 9 was not a provision which was required. Last year, Arun bhai, there was a total overhaul of entire section of 148 income escaping assessment. And we know that there were some positive changes also, where they say that before reopening of the case in the new law, they will first give a notice under 148A, and all those things were there, which we have discussed in last 1 year, lot of times in your seminars and other seminars. Now, after that earlier amendments in Finance Act 2021, they have made 3-4 critical amendment, Arun bhai, significant amendments in the last year changes. That is, I want to say, in the new regime of 148, you can note down 4 or 5 important changes, sir, which have happened in this income escaping assessment cases. First change, Gupta ji, is in section 148, which gives us the category of cases where in new 148 law, escapement of income charge can take place. That is section 148, explanation number 1 to new section 148. In the last year, when this provision was brought, 2 categories were there, sir. That one information which is coming in the assessee's account and portal, that it is that some income has escaped assessment, that can be the basis to issue 148. And second, any final audit objection. Now, apart from these 2 things, 3 things which were already there, they have added 3 new things also, Gupta ji, which now can become additional basis to issue 140. Now, what are the 3 things you can note down? One is any information coming from any foreign country under section 90 and 90A, that can become the third basis to invoke section 148 in the new law. Fourth thing which they say is कि any information coming under section 135A 135A, that is अगर उसमें कोई इंफॉर्मेशन आता है विभाग को तो वो भी आपका केस खोलने के लिए उपयोग किया जा सकता है, रीओपन करने के लिए. और एक बाहर का कंट्री से कोई इंफॉर्मेशन आता है 1990A में, वो भी हो सकता है. और थर्ड इज वेरी इंपॉर्टेंट अरुण जी, एनी ट्राइब्यूनल ऑर्डर और एनी कोर्ट ऑर्डर जिसका बेसिस पे ऐसा लगता है कि एसएससी का साल 148 में इनकम एस्केपिंग असेसमेंट है पर्टिकुलर ईयर में, तो वो कोर्ट ऑर्डर के बेस पे और ट्राइब्यूनल ऑर्डर का बेस पे भी देवेंद्र जी 148 हो सकता है. तो 3 नया चीजें डाल दिया, पहले 2 था, अब मिलाकर 5 हो गया. टोटल कपूर साहब 5 नाउ कैटेगरीज विल बी देयर in which in new 148 law reopening can take. क्लियर है अरुण भाई? इसके अगला चेंज जो क्रिटिकल चेंज है 148 में, आप नोट कर लीजिए सर. पिछली बार जब उन्होंने बोला था कि 3 साल तक केस खुल सकता है, लास्ट ईयर when they said कि only till 3 years normally reopening can take place, and if the reopening has to go beyond 3 years and till 10 years, then asset has to be there and 50 lakh rupees escapement has to be there. Now apart from asset criteria, they have also introduced 2 more criteria where department sir can invoke extended period of limitation. That is in the law which they brought last year, only one criteria was there, Arunji, that asset criteria, where the reopening could take place beyond 3 years until 10 years. Now what are the additional 2 criteria? You can note down please. Monetary criteria is same, 50 lakh rupees per year. But what are the new 2 more bases on which extended limitation period can be invoked? One is sir एक्सपेंडिचर इनकर्ड, मतलब कोई भी खर्चा हुआ तो भी आपका 3 साल से पीछे का केस खुल सकता है. मीनिंग देयर बाय इफ एनी एक्सपेंडिचर इज डिटेक्टेड बाय द डिपार्टमेंट which probably is unaccounted expenditure sir, then also extended period of limitation can take place. I hope you are noting expenditure. Second is any entries in the books of accounts. This is very critical. Any entries in the books of accounts. जब लास्ट ईयर अरुण भाई ये बजट आया और जब ये चेंजेस आया, हमें लगा असेट तो बहुत कम केसेस में मिलेगा, असेट विल बी देयर इन वेरी फ्यू केसेस. बट नाउ ड्यू टू these 2 new variants which are added in extended period of limitation, I am telling you sir with humbleness that scope of reopening beyond 3 years will become much more wider. That is my humble opinion, due to this expenditure criteria and due to this criteria of entries in books of accounts. I hope I am clear Arun bhai.
Yes sir, yes sir.
I am making sense. The third critical change, brother, is made in this law. I'm sorry. The third important change in this law, they say, is 148B. You can note down. I told you this is the most important, most positive change which I find in this budget's provision is 148B, where they say in the new law, when reopening take place, Arun bhai, normal cases and search cases and survey cases all have to be assessed in the new law under 148. Now for when the case will be assessed in 148 after Anmolji, after search and survey, there is a special provision now which they have inserted in the Income Tax Act, that is 148B. Now what does 148B says? 148B says that when the case will be reopened in the new law under 148 after search or after survey, then even at the time when the assessment will be completed, approval will be sought from the concerned range head, joint commissioner and additional. So this is an additional approval requirement introduced in 148B to be taken in search cases and survey cases at the time of completion of assessment. So this is third change, Arun bhai. Fourth change is regarding some search and survey cases. Na, they have also said somewhere that no, that is in 148A. Yes, 148A, Arun bhai, they have said that no prior inquiry will be necessary in those cases also where 135A वाला information comes. जहां 135A का information आया है, वहां 148A करने का जरूरत नहीं होगा. ये उन्होंने 148A का एक्सेप्शन डाला एक नया कि 135A के इंक्वायरी पे जहां केस खुल रहा है, वहां 148A में आपको 148 करने से पहले नोटिस आना जरूरी नहीं. I hope I am clear in this simple sense. So other sets of changes, Arun bhai, which I can highlight very quickly is the changes relating to business reorganization. I am telling you they are very practical. You may note down the sections in which these changes are made. Already Devender ji is looking at me with curiosity. The section is section 170A and 156A. Sorry Devender bhai. 170 capital A and 156A. I am telling you what is this section. I can tell you very quickly. 170A and 156A. 170A, Anmol bhai, says if any assessee or corporate assessee has gone for business reorganization, amalgamation and merger, then by the time this order of the tribunal or high court comes which approves this amalgamation and reorganization, Arun bhai, till the time predecessor can be assessed and it will be deemed that it is successor assessment. Are you getting my point? They say in 170A, when business reorganization take place and the case is pending before court and tribunal, till that time predecessor can be assessed and it will be deemed that it is successor who is assessed. Are you getting my point? And there they have also made consequential provision कि जहाँ बाद में कोई order आता है और उसमें कोई ऊपर नीचे होता है effect, then the returns can be revised by the successor on behalf of predecessor after the order of the tribunal, NCLT or high court comes on amalgamation and merger. I hope you have noted section 170 capital A. And 156A, Arun bhai says what? कि जो कंपनियां IBC में चले गए और IBC में जाने के बाद IBC का अथॉरिटी ने उनको एडजुडिकेटिंग अथॉरिटी ने इनकम टैक्स का डिमांड कम कर दिया, तो वो इनकम टैक्स का डिमांड जो 150 जो IBC लॉ में कम हुआ है उसके बेसिस में इनकम टैक्स लॉ का भी डिमांड कम हो जाएगा. दैट इज 156A. आई होप यू आर गेटिंग माय पॉइंट. 170A क्या था कि प्रीडिसेसर का असेसमेंट हो सकता है जब तक बिजनेस रीऑर्गेनाइजेशन का फाइनल ऑर्डर नहीं आया है. 156A में क्या बोला कि साहब जो ऑर्डर IBC लॉ में आ गया जिसमें इनकम टैक्स का डिमांड कम हो गया तो वो रिवाइज डिमांड नोटिस के लिए बोल दिया मनोज जी उन्होंने 156A में. टीडीएस के प्रोविजन में दो बहुत महत्वपूर्ण चेंज है अरुण भाई. क्विकली, वेरी वेरी क्विकली. 194 कैपिटल IA में जब आप टीडीएस काटते हैं एट द टाइम ऑफ परचेज ऑफ इमूवेबल प्रॉपर्टी, you have to also now incorporate stamp value. 194 IA says TDS has to be deducted at the time of transfer of immovable property. Till now we were deducting TDS only on actual consideration. Now in the change they say Arun bhai you have to also see whether what is the circle rate. Deductor has to see, buyer has to see the circle rate, and if circle rate is more, TDS has to be made on whichever is higher, circle rate or actual rate. That is 194 IA change. 194R, where the mistake I did now, Arun bhai, 194R change is also critical. Please note, 194R, capital R is inserted in extension to section 28 Roman 4. You please note section 28 Roman 4, उससे समझ में आएगा. 28(4) says कि if in the profession, Kapil Goel is a professional and some firm who is taking consultancy from me is giving some ticket, air ticket to go to any country, then it will be my business perquisite taxable under 28(4). Till now, there was no TDS provision in the income tax law which require any TDS deduction on business perquisite. So to have TDS in 28(4) type items, 194 capital R is inserted. I hope you get my point. 194S तो था virtual digital asset के लिए. 194R किसके लिए हुआ सर? Perquisite obtained by a person during the course of business and profession. And rate of TDS unmold by is 10%, as I have remembered, recapitulated, and 20,000 I believe is the monetary threshold. $179 change is not that much important. The important last change I can tell you, or I can say the second last change, Arun bhai, is in section 239 capital A. It is very important to note down. 239A change says that if a company or an assessee is there in India, he is taking services of non-resident and the liability to bear tax is of the Indian party, then an Indian party wants to have some kind of declaration to the government from the department ki sab, whether this amount of tax which we are deducting is really deductible or not. For that they have brought out a new provision, section 239A. What 239A says, in those agreements where the TDS is to be, tax is to be borne by the Indian party, that is the Indian payer, then first that payer will apply to the AO under 239A to get the nil TDS declaration. If that does not come, then they can go to appeal. Earlier it was happening that we were straightway going to appeal under 248 section. Now you have to first go to AO under section 239A. You note down this, sir. With this, I come to the last point of my presentation, sir. Last means last, Arun bhai. Last appointment is this 271AAB penalty, 271AAC penalty, and 271AAD penalty hitherto can be levied by AO. 271 AAD वाला पेनल्टी आपको पता है वो कौन सा था? वो अभी भी ऐड हुआ है, फॉल्स एंट्री, ओमिटेड एंट्री. AB वाला सर्च पे लगता है. 271 AC वाला लगता है अनएक्सप्लेन कैश क्रेडिट वगैरह पे. 271 AB वाला लगता है सर्च केसेस में. 271 AED वाला लगता है फॉल्स एंट्री, ओमिटेड एंट्री पे. अब कपूर साहब इसमें क्या हुआ है उन्होंने ये तीनों पेनल्टी लगाने का पावर साइमल्टेनियसली CITP को भी दे दिया है. प्लीज नोट डाउन. 271 double AC penalty, 271 double AB penalty, and 271 double AD penalty. 3 types of penalties can also be co-extensively, Arunji, levied by Commissioner of Income Tax Appeals. I'm sorry, within this time, I tried my level best to highlight all the important changes. Even if I left anything, please kindly pardon me, sir, because today is the first day and I have a limitation of time. This budget is so long. So I thank the organizers, Arun Bhai, Anmol Bhai, Devender ji, Manoj ji, and all the 280 participants in this night time after 9 o'clock who have joined me in this discussion on the Finance Bill 2022 on direct tax proposal. I thought I made some justice to my topic and my duties and my responsibilities. Thank you all of you.
Thank you very much, sir.
Thank you so much, Kapil sir, for a wonderful deliberation and guiding us through the direct tax changes brought in by the budget today. Now we have another renowned expert of indirect taxes, Atul Gupta ji, who again does not need any introduction. He is carrying an experience of specialization in indirect taxes of more than 20 years, in which he has given innumerable seminars or lectures on indirect taxation, along with trainings, in-house trainings. Other than that, he has remained immediate past president of Institute of Chartered Accountants of India, and is currently serving as a board member of IFAC, International Federation of Accountants. Without taking much time, I would like to request Atul sir to kindly guide us through the indirect tax changes introduced by Finance Bill 2022.
Thank you, Anmol. Friends, very good evening to all of you. And let me be very crisp and short, because we are running behind the schedule and I have to speak only for 16 minutes. The next 16 minutes, I will be addressing each one of you, and we have to close the session by 9:30 sharp. Friends, as far as the indirect taxes and the GST changes are concerned, normally what is happening that because of the GST Council, we have the regular amendments coming into the GST, and the budget is one of the way that the changes are being introduced. Now, overall, there are around 17 changes are there in the budget 2022 as far as the GST is concerned. Friends, first of all, the first change which is there in the input tax credit, and I believe that because of these changes, though the purpose of these changes is to see that there should be proper compliance from the assessees, there should be check on the evasion of tax if any is there, and so on. But at the same time, in the pretext of looking into the better compliances, at times we are increasing the burden on the assessees as far as the compliance as well as the ease of doing we are talking about. So friends, when we are talking about the input tax credit, there are the 7-8 fundamental requirements are there that after introduction of the 2B. So initially we were matching with the 2A. Now recently the 2B was introduced, that in case the credit is matching with the 2B, then also you have to comply with the certain requirements, that the eligibility requirements, that the credit, you should be having the business credit, you should have the invoice, you must have received the goods or services related to that invoice, and then the supplier has paid the tax and you have filed your returns. Apart from that, you have to pay in 180 days and the credit should not be a blocked credit. Now, apart from these 7 requirements, otherwise you can claim the credit which is getting reflected in the 2B. But now, my dear friends, with these recent amendments which is being introduced today, there are the 2 important aspects which you have to take care as well. One is Section 38, which is giving us the 5 new kind of the embargoes, that okay, in case you are any of these conditions will be applicable on you, still you are following, though you are following the 2B is there, you are fulfilling all the conditions, still the credit will be blocked. And first one out of that is that for the new registration, so they are proposed that in case it's a new registration and the government feels, the department feels that okay, this person should not be allowed to claim the credit for the next few days, maybe because they have not given the exactly the days right now, they will be, which will be introduced through the rules, but they have mentioned that in case they feel that okay, the credit will not be allowed for certain period, then they have enabled themselves in such a way that they can block your credit. The another point which they have given, that in case you are irregular in paying the tax, then also they can block your credit. They have also mentioned that in case the GSTR1, the value in the GSTR1 is more than the GSTR3B, they can block your credit. in case your supplier has did the same, that okay, he paid the less tax, then they can block your credit. And finally, you are aware that there was a notification issued under which they proposed that a percentage of the tax you have to pay in cash only, and you have not fulfilled that. In that case also, you are supposed to, they are saying that we can block your credit. And finally, they have mentioned that by virtue of the amendment, that there will be now a limit, a threshold which will be prescribed by the department. By virtue of that, if you have a, say example, a liability of rupees 2 lakhs is there, and you want to pay through the input credit which is available to you, that will not be permissible in totality, meaning thereby a certain percentage will be prescribed for every SSC or as a across the board, that you have to pay only in cash, meaning thereby the earliest regime of a excise, wherein you can pay only through the PL, you can't pay in the month of March something like through the PLA. They have now saying that as per the law, you have to use only a percentage of the credit to meet your output liability, and rest you have to pay in cash. So my dear friend, what I am trying to convey you, that by virtue of these amendments, what they are proposing, that not only this credit should be available in 2V, but also apart from the eligibility conditions, the block credit, that the payment within 180 days, there are these other conditions which are now being imposed that will create a block for the credit, that okay, that will restrict the credit for the SSC. And that is something that very, very importantly we need to take care while we are complying with the law. So that's one aspect which I wish that we should be discussing. The another point which is there for the registration, the cancellation of the registration, which talks about that okay, in case you are not fulfilling certain conditions, your registration can be cancelled. Now, normally there are the two type of SSCs I am talking about. One is a normal SSC, the another is a composite dealer. In case a dealer is in a composition scheme, the law was that okay, in case there is an irregularity in filing the 3 continuous return, then the registration can be cancelled. But now, over a period of time, the law was saying the 3 return, but on the another side, the law prescribed that you have to file an annual return. So what was happening that in case the composite dealer is there, a registered SSC with the composition scheme is there, and could not file the 3 returns, meaning thereby 3 years, then only the registration can be cancelled. Now they have prescribed that rather than this 3 year, it will be the 3 months, meaning thereby in case the due date for the composite dealer is 25th of April, and he is not able to file the return by 25th of July, then his registration can be cancelled. Similarly, for the normal SSCs, though they have not prescribed the timelines, but they have taken the power that for the normal SSC also, they will prescribe that in case you are doing a non-compliance as far as the filing of return is concerned, then also your registration can be cancelled. My dear friend, apart from that, there is a very welcome change. That normally what was happening, if there is any mistake, for example, I was supposed to claim the credit, but I forget, then I can claim by 20th of October. In case I have to issue a credit note, I failed to do so, then also I can issue the credit note by 20th of October. Now, my dear friend, this 20th of October, though it was as per the law, it was the due date for the filing of the September return. So 20th October is a layman language which I am talking about. Now they have extended that period to 30th of November, meaning thereby any mistakes, whether you fail to claim any credit, there is a problem in relation to the issuing of credit note or something, you can do the same by 30th of November as compared to the 30th of September, which was earlier. My dear friend, apart from that, there are some other changes are there which are very, very important. The first one is the filing of the sequential returns. So you are aware that in case you fail to file a particular period return, the next period return was not supposed, the GSTN portal was not allowing you to file the same for the next period. But that was not embedded with the law's provision of the law. Now they have amended the law. They have amended the section 37 in such a way that they have prescribed that there will be a sequential way of filing of returns, meaning thereby unless and until you will not file the previous year period return, you will not be allowed to file the next period return, which is there in the law. Now, my dear friends, apart from that, there are other provisions which are noteworthy to note down. is about the mismatch of credit, mismatch of tax liability vis-a-vis the 3B return. Now, my dear friends, what is happening that in case I am filing a return, I have to see that whatever is my output liability, that should be getting reflected in the 3B as well. But what was happening that because of the QRP scheme introduced for the small payer, they were paying the tax on a regular basis, and then there were a schema that you can pay 35% for the previous period and something like that. But my dear friend, there was again not a legal backing was available, and that's why they amended the section 39 in such a way that even if there is a tax liability in the GSTR 3B is different, you are paying less amount, that will also serve the purpose, because you have already paid the tax, or there was a legal provisions backing that you are not supposed to pay the entire tax which is there as per the 3B. My dear friend, there is again requirement, as you are aware that from 1st of July 2017, when the law was introduced, that you are supposed to file a GSTR 1, GSTR 2 and GSTR 3, meaning thereby you are supposed to file the purchase return as well, apart from your sales return. But because of the non-functionality of that return, there was always a guess that when this GSTR 2 will be introduced. Now, my dear friend, since they have not implemented the GSTR 2, now they have amended the law and removed the requirement of filing of the GSTR 2 at all from section 38 and the other consequential provisions, so that now there will not be any GSTR 2 as such in the law book, though it was not applicable in any case. Now, my dear friends, one very, very important provision which everybody should listen, that everybody should hear that particular aspect, about the provisional credit versus the actual credit. Now, my dear friend, you are aware that the 2A, if my 2A is not matching, what was happening? Say, for example, I have a total credit of rupees 2 lakhs. 1 lakh is getting reflected in 2A and 1 lakh not, because of the fault by the supplier. So earlier I was supposed to claim 1,20,000, that is 20% extra. And then it was reduced to 10,000 and finally the 5,000 rupees. And now this 2B is there. So at times we were feeling that in spite of it is not getting reflected in 2A, I am eligible. My right is there to claim 120 or 110 or 15 as the case may be. But my dear friend, I used to say that it's a provisional credit. It is not the case that, okay, you have the right on this credit, and unless and until the supplier will not pay to the government exchequer, will not update his 2A, then your credit is only a provisional credit and you have to reverse. But there was always a kind of a apprehension around that. But now, my dear friend, just to share with you that this section 11 has specifically prescribed that in that case, that 5%, 10% or a 20% extra credit you have claimed on a provisional basis, you have to not only reverse, but also you have to reverse along with the interest. And in case the supplier later on pay, the 2A is getting updated, you can reclaim the same as well. So, my dear friends, it's very, very important that when you are claiming this 5%, 10% on a provisional basis, that is subject to the further review by the section 41. My dear friends, apart from that, there was a provision related to the TCS returns, that section 52 was there. But there, in case there is a failure to pay, failure to file your TCS return, there was no late fees as being prescribed. But now in the new provisions, they have prescribed 100 rupees per day, subject to the maximum 5,000 rupees will be the late fees in case you are failed to file your TCS return per se. My dear friend, as I discussed with you at the time of ITC, that you are supposed to pay your tax liability, not 100% through the input tax credit, but you have to pay certain portion in cash as well. So this was a notification issued 94/2020 and last year, and it was supposed to get implemented from the 1st of January. But because there was no legal backing, there was a Gujarat High Court case wherein it was being challenged. And now, to enable that provision, that enable to give the legal sanctity to that particular notification, now there is an amendment in the section 49 which prescribe that the government may prescribe that out of the total liability, total output liability, how much you have to pay in cash only. You can't use the input tax credit. So that what will be the percentage, what will be the amount, that will be in the times to come, will be declared through the rules, will be clarified through the rules per se. Now, my dear friend, apart from that, there was another announcement in the GST Council that in case you have a cash ledger, you have a credit available in the cash ledger, then you can transfer that cash ledger from a CGST to the SGST, but within that same state. But the purpose was that in case I have a output liability in X state and the cash ledger I have a balance in the Y state, I should be allowed to transfer that cash ledger balance into my another state to meet my output liability to have for ease of doing. And that is being now facilitated through the amendment in section 49, meaning thereby amount available in the cash ledger can be transferred to the another GSTN or within the same PAN number. So the company is same, but you have the two different GSTN number. You can transfer the cash ledger account from one registration to the another registration, apart from the transferring from a CGST to SGST and the vice versa. My dear friends, last few suggestions, last few amendments is something about the GSTR 3B vis-a-vis the refund claims. The government was saying that you can file your refund claim through the 3B, but there was no column being prescribed. But now they have prescribed that they will be issuing a fresh form for filing of such refund claims, but with a rider that in case there is any recovery pending, from the SSC, then the refund claims will be withheld. So it is very important that we have to see that how the procedure will be initiated in such a way that in case, even if there is any recovery pending, process is pending, that should be disposed of expeditiously so that the refund claim of a larger amount should not be blocked with us because of the small liability which is pending with the government. My dear friends, apart from that, there are small suggestions are there, small amendments are there. Since the time is essence, and we will be developing a separate booklet for the users and the friends who are participating in this program, that we will be circulating a complete detailed booklet by tomorrow morning, maybe around 7 o'clock or 8 o'clock in the morning. We will be working, I believe that even today's night. But just to conclude, there are the two further amendments which are being there in the provisions. One is about the fish meals and the another is the liquor license. These two aspects were taxable under the GST regime, but now with a retrospective date, that from the 1st of July 2017, the same has been made exempted, meaning thereby this was not supposed to, these were not taxable under the GST regime. So no refund is available, but these were not taxable from the 1st of July 2017. So in case there is any litigation pending, that will serve the purpose of by having this kind of a amendment. So my dear friend, before concluding, I just wish to share with you, there are the 4 retrospective amendments in the law from the 1st of July 2017. One is about the rate of interest. My dear friend, you are aware that in case there is a wrongful availment of tax, but that is not being claimed. So there is a availment but not utilized. Then there is no interest liability as being clarified by the department. But in case it is being wrongly availed and utilized, then the rate of interest was 24%. But now with a retrospective effect from the 1st of July 2017, that has been made at the rate of 18%. So it's a welcome change by the Honorable Finance Minister that, okay, the SSC will get a lot of ease because of this. So my dear friend, there are the 4 amendments which are there from the 1st of July 2017. One is the rate of interest, which is made 18% from the 1st of July. The second one is about the fish meal. The third is a license to the liquor license fees. And the fourth one is a portal. So my dear friend, there was a portal called gst.gov.in. That portal was always in a litigation because the notices were issued on that portal, but there was no legal backing that this portal is an authorized portal for the purpose of this process. So to make this, because there was a challenge on that portal, so the government enabled the provision in such a way that that portal got a legal sanctity, meaning thereby that from the 1st of July 2017, the official portal of the government to communicate with the SSC is gst.gov.in. So my dear friend, this was there with a crisp and the brief discussion about the amendments which are being proposed in the GST law by the virtue of the budget 2022. With this, I thank you to the organizer for giving me this opportunity. Thank you very much and have a good evening to all of you. Now, once again, I request everybody to please take care of yourself in the pandemic and once again, happy learning to all of you. Thank you.
Thank you so much, Atul sir, for a wonderful session, for quickly guiding us through all the amendments in indirect taxation. Thank you so much. Again, on behalf of TAXO team, it's already 9:32 p.m. On behalf of the entire TAXO team, I would like to thank everyone of the 200 participants who have stayed up this late and for this interactive session. Thank you so much to everyone and a very good night to everyone.
Thank you, sir.
Kapil ji, thank you, Atul ji.
Thank you, Atul ji. Thank you, Kapil ji.
Good night, sir.